On this episode of Cyber Sentinel, we've got a guest, Eric from Togneri Capital, and we're going to talk about what your business is really worth. Hello, I'm Alan Adcock. I'm CEO of ASC Group. We're an IT and cybersecurity firm based here in Atlanta, Georgia. On this episode, I'm joined by Eric Togneri from Togneri Capital. And tell us a little bit about Togneri Capital.
So we're into our 13th year now, and what we do is help companies determine, build, and realize the value of their organizations. And so by determine, and I think what we'll speak about mainly today, is the valuation of a company. How much is a company worth, and how important that is, and how it impacts the daily decisions that forward-looking entrepreneurs think about. And building is really about how, over time, you can improve the value of your organization, and there are many things that we'll dive into today regarding that. And then finally, we help companies realize that value, and by that, the transfer of the value of that company to another individual.
Awesome, Eric. So we'll get into the first questions.
How can I know if my business is worth investing more in?
Many entrepreneurs start a company without a clear vision of where they want to end up. How can Togneri Capital help those entrepreneurs establish a value mentality for viewing their company as an asset rather than just as a job? And how does that change the way owners choose to invest in infrastructure and professional services over time?
The assistance that we really provide around, first of all, getting a baseline. What is a company worth? And we have a whole process that we utilize through a software called BizEquity. And what BizEquity has done is make it affordable and easy for a company to, first of all, get that baseline, and then over time continue to have that as part of their planning process. And so I can go to a business owner, about any business owner, and they'll be able to tell me how much money they're taking in and how much money they're making. But very few, in fact, over 90% of companies have no idea what their company is really worth. They might have a preconceived notion, but they don't really know.
Sure.
And so it's important that that they get this value mentality, because another big number, over 80% of the net worth of business owners typically is tied up in the value of their company. It essentially is going to be their retirement plan. And so it's really, really important that not only do they figure out what they're worth, but then they start going and understanding exactly what are the drivers of that worth and what are they doing over time to make their company more valuable.
Yeah, so when do you recommend that an entrepreneur or business owner start looking at that valuation?
Yeah, really, as soon as you get out of that startup phase in an organization, that's the best time to do it. And it should be run, just as you would run your P&L statements or do your tax returns. Doing a valuation on your company in regular intervals is just really critical, because then all of a sudden the business owners start to understand exactly what they're doing daily to impact the business. And I'll just give you a few examples. I mean, for instance, how much is the business reliant upon the business owner themselves? In other words, is it a job or is it a company?
Right.
The more it's a company, the more value that company holds. And so one of the key inputs into our valuation process is, what's the impact of the owner leaving the business? In an ideal world, the owner should be completely replaceable. And so that's really managing towards that, and that makes the company more valuable. Another key thing that folks don't tend to think about is, what is the recurring revenue that they have in their organization? In other words, what type of revenue can they reasonably count on being able to repeat over and over again? So companies like insurance companies have high degrees of recurring revenue.
Absolutely.
Because people are just signing up, and you know what, we've had insurance companies where the guy basically turns off the lights and just rewrites policies every year and loses maybe 5, maybe 10% of his business every year. But it's still a small percentage, and so that recurring revenue is critical.
Almost like an annuity model.
That's right.
And those annual renewals.
That's
going
right.
forward.
So when you look at companies like software companies that are doing license agreements and subscription models, anything like that, makes a business much more valuable. But often people don't think about how that can actually be done within an organization. A great example of an organization that you wouldn't think would have the possibility of having a recurring revenue model was a real estate company that we just sold. The real estate company started off as a residential real estate company selling primarily homes in that sort of $500,000 to $1 million space, and was going transaction to transaction. Really no recurring revenue whatsoever, other than a few real estate investors that were out there that would rely upon them. But then they added property management to what they did, and next thing you know, they had created a model where their minimum contracts with their property management side of their business were year-long contracts at a minimum. Some of them were 5, 10-year contracts, and so they already knew what they were going to be getting paid today, years out. Well, that company sold for an incredible multiple and was incredibly attractive to all kinds of individuals that were in and around the real estate business, and it was a very easy company for us to sell for that reason. So there are things like that, that are kind of tangible examples of how a business owner can proactively start to think about their business, not as I take in this much revenue, and not as I take out $250,000 a year, from this business and I'm living a nice life. They're thinking more about when I have to exit this business, when that day comes, and it will, how is that value of the company, that 80% of their net worth on average, how is that being managed on the daily decisions? Because it's very unlike, stick with real estate, it's very unlike real estate in the sense that you can't slap on some paint or remodel a kitchen, like you could do that within a couple of months and your house is ready to be put on the market. Businesses take years and years to create the value of their organization. So the products and services, to bring it home back to your business, it becomes a matter of managing risks. So if you're a business owner and you have not protected yourself, you don't have the right cybersecurity measures in place, that business is at risk. That's at risk.
Your work and all that automation and those processes you put in place can evaporate.
Right. It can evaporate quickly.
Pretty quickly if you get targeted that way. Yeah, absolutely.
Yeah.
That's a great example too on the real estate side, because you typically a real estate company that's very transactional is not worth much.
That's right.
Until they added that piece. So that's a great example of being able to add value to that business over time. Perfect. Thank you very much.
What methods can I use to value my business most accurately?
So Eric, anytime somebody builds something from scratch, it's going to be really valuable to them, probably more valuable to them than anybody else on the planet. So how does Neri Capital use software and other tools to help owners really understand what their company that they've invested their lifetime oftentimes in building, what is it really worth, and how do y'all help them to understand that?
Yeah. First of all, one of the main reasons why business owners do not get valuations to their companies is because they're afraid. Frankly, somebody's going to tell them their baby's ugly, right?
Yeah.
And so that might not necessarily be the case at all, but part of what we do is really, coming in and not insulting business owners, but allowing them to see how simple it is really to get a valuation, which is basically once we have access to their tax returns and their balance sheets and their P&L statements, and we typically get 3 years trailing, and then we'll work on wherever we are in their current cycle and project out. So in this case, we'd be projecting out through 2019. What we do is just make it non-threatening as we possibly can do it.
Sure.
And then once they have the knowledge, they feel like they're so empowered because they realize that it's important, the value of their company. They realize that it's something that they should do. It's just like one of those things, like you just don't do it because you don't have to do it.
Right.
You don't have to do it. And once you get past that first step of collecting their information, they start to realize that it's not a threatening process, that it's something where we're trying to partner with them, not only in giving them a number, that this is what their company's worth, but also talking to them about why that number is what it is and the steps they can start taking to start building the value of their company. We do well over 100 valuations per year just in our company.
Okay.
And about 80% of those turn into what we call value building opportunities, which is really a business owner saying, you know what, I'm not ready to sell my company now, but in 5 years from now, I want to be ready, to at least put my company on the market if I choose. And so what do they do between now and this arbitrary 5 years down the road mark? And what are they doing now in case something, comes up that maybe they didn't anticipate, health-wise or maybe it's a partnership that goes south, or whatever might end up happening. You want to be ready for that day. You want to understand what the value of your company is, and you want to be taking those long-term proactive steps to get it to where you want it to be when that day of exit does happen.
The sales and sales and sales is the obvious driver for valuation, right? And get those sales numbers up as high as you can. Are there other areas that you focus on in those valuations to help those companies increase that value?
Yeah, I mean, revenue is a key input into any valuation model, but typically businesses sell on profits, earnings before interest, taxes, depreciation, and amortization. And so the common terms that you'll hear is oh, that business sold for a multiple of 4 times EBITDA, which is the acronym for that. And so you get to the point where you say, okay, well, profit is really key, so we got to figure that out, but it's also risk. And it's either risks through things like we, led off with in cybersecurity, but it's also things like the ownership risk that we talked about. Can the owner be extracted from the business, or is it based totally on the owner's personal relationships?
Right. Is it his personality? Is the owner the chief salesperson? If they leave, our sales just evaporate.
That's right. So that's a key one. The consolidation of your top 3 customers and the importance that has to the business. So if your top 3 customers represent 5% of your business, it's a much less risky organization to purchase if, say, for instance, hey, Chick-fil-A is my biggest client and they do 80% of my business.
Sure.
So you get that here
you lose that
Atlanta.
that contract renewal and
That's
you're
right.
in trouble.
So you're reliant on very few customers. So what are companies doing proactively to mitigate that risk? And so that's another key thing. What type of growth is the organization undergoing? Is it a stagnant organization? Is it an organization in decline, or is it an organization in growth? The company is going to be more valuable, obviously, if it's growing.
A growing company.
Both profitably
and you see that
and
through
revenue.
those tax returns and that analysis of those
That's
numbers
right.
over the last 3 or 4 years.
Yeah, and so that's why we get the 3 years trailing, and we try to give credit for what's in process. So a reasonably forward-looking forecast for, typically, we'll do it within a year, and that's sort of generally acceptable to the business community. But that comes up with, a number of where they are, and so okay, I find out, what, I've got too many eggs in one basket. In my Chick-fil-A example. Well, what are you doing to bring on more customers and maybe taking some of that risk down to maybe it becomes 20%, in the example that I gave of the
Diversify that client base.
Diversify the client base. So that's really, kind of key. The big piece is really getting folks over that first hurdle of, I'm not afraid, of what it's going to be. One of the key things that we have been able to do through Biz Equity, which has sort of revolutionized the valuation business and why we subscribe to their service and their software, is that they've made it affordable. Once upon a time, for those people that all they do is valuation work, we do consulting work on value building, and we help people. Our primary fuel for our company is transactional. So we help people sell their business or get investors or help them buy businesses. That's where, our lifeblood of our firm is, yet, we're able to subscribe to a service like this and not be reliant on valuation income, for our organization. So what does that mean? To a business owner, it means instead of having to pay $10,000, $20,000 for a valuation of your company, if it's not a very complex operation, we can do it for, say, $2,500. So we'll look at each company individually, but it gets it down into that affordable level. Biz Equity coined the line that they have democratized valuation, and all that means they've made it affordable for small business to not only get a valuation, but continue to get them over the course of time and make that a critical part of their planning process.
Right, and since you are involved heavily on the transaction side of this, it's not just a paper valuation. It's a valuation that you could actually go and market that business and get that money.
That's right.
For that owner. So it's real. It's a real valuation.
It's real, and so it's key to when you start pricing a business. Businesses are it's a little bit of art and a little bit of science to it. I mean, there's some quantifiable numbers, but there's also all kinds of factors. We find with small business owners, typically they do what we call living out of their business. And so their personal finances and their business finances get kind of tangled up,
Yes, they do.
So, so different things happen, and we kind of go through what those are, but to get to a real number, so a typical situation is a spouse will be on the payroll, and it'll turn out the spouse is getting full-time wages and maybe chips in, 5 or 10 hours a week.
Sure.
So we see things like that. Personal vehicles running through businesses, another common thing. Kids that are in college that are making $100,000 a year on the payroll, and they're going to school full-time. You uncover all of these things, and so you have the hard numbers, and then you have sort of these softer, what we call discretionary earnings numbers, and then we come up with that, and then that's all fed into a software model with a very complex algorithm that BizEquity would never share with anybody unless you wanted to buy them. And,
Sure.
And so we use the output of that to say, okay, well, if I took you to market today, this would be our expectation for where the market will land. But ultimately, like with real estate, I'll keep going back to that model because people are comfortable with it and understand it. It's not, as though, I know what my neighbor sold for and their house is about identical to mine, and so I'm guessing, I'm right around that mark. It's not that easy, but once we do all of these add backs, these discretionary earnings, the hard numbers that are in their profit and loss statements and on their tax returns, then we're able to get them into a ballpark range. And then what happens is, say a valuation comes out to an even number, $1 million is the value of a company. If their company's worth $1 million on the valuation model, dependent upon how they're managing their company, that's where the company is really worth maybe $900,000 if they have a lot of risk in their organization, or maybe it's worth $1.2 million if they've taken all the steps they needed to get their security in place with their IT, to extract the business owner from being essential to the company, and recurring revenue and all these other things. Well, that's where you get to the upper end of the range and how you get maximum value and get the business owner into a position where they exit in the best position possible.
Excellent. Yeah, and separate some of those personal expenses out of the business, so that's kind of a separate entity going forward. Awesome. Just great.
Are there ways to increase the value of my business?
So Eric, here at ASC Group, we believe that every business should have a professionally managed IT infrastructure to increase their productivity and decrease their risks in that environment. How does Neri Capital work with business owners over time to increase the value of those businesses when they come time to sell, and make sure that those business owners get to exit on top?
Yeah, I mean, really the main thing that we do, is start with that valuation that we've been talking about, and so that's a statement of where we are today.
Yep.
That we have a very candid conversation with the business owner, and so they kind of know right where they are. And if for instance, and since meeting your organization, we're integrating into our process, asking the right questions around their IT security and systems. So we certainly are bringing things like that up proactively, but just as proactively, we partner with companies like yours, but also wealth managers. Are they thinking about their life legacy and how they're setting their organizations up and managing their overall net worth, which might be in their personal real estate, it might be in real estate tied up with the business, it might be in the value of the company that they own, or it might be in stocks and bonds or wherever they want to put their money.
Right.
But the accumulation of all of that is their net worth. And so we end up, with the small business owners, helping them understand, what role that plays in their overall portfolio, that being the value of their organization. And then how we work with them is making sure that, okay, well, you don't have a wealth plan in place. It's very important that they do that and start thinking about, okay, well, it might be, the business might be sufficiently valued for them to live their lifestyle the way they want to live in retirement, say, or to go on and buy their next company. But they won't know that until they get the value of their organization in line and think about their own personal financial goals and get with a wealth manager. So we'll bring in folks like that. If they have a CPA that's just doing tax work, but they're the size that they really need an accountant in an advisory role, we will make sure that maybe they get from a bookkeeper to somebody that's really able to help them manage in a more sophisticated accounting environment. So those are just a couple of examples of what we do to help business owners exit on top.
So maybe not a full-time CFO, but maybe a part-time CFO that comes in and helps really look at those numbers and figure out how to increase their revenue, decrease those costs, and get everything ready to sell. Are there other areas of the business outside of the finance part that y'all look at? Is there processes and that kind of thing that y'all look at trying to optimize?
Yeah, really mainly around those areas that we talked about, into evolving the business into a more valuable entity. But a lot of that has to do with with how they're structuring their business. So what's their revenue model, and helping them to kind of realize whether that's suppressing or adding to the value of their organization. So we'll identify those type of things and take proactive steps along with them in order to fix that problem. We call them CXOs, so fill in the X, right?
Got it.
So it could be an outsourced CFO because we see there's a financial problem. It could be a marketing problem. We work with a full-service marketing agency that we recommend routinely to our clients as well to help them get their marketing house in order if that is the issue within the organization. We have basically a strategic human resource individual, so not somebody that's managing payroll, somebody that's thinking about the human architecture in the company, the skill sets and competencies in the company, and so we'll bring in a human resource expert if there is indeed a void somewhere within the organization. Maybe job responsibilities aren't aligned with competencies, and so they can help out with getting that part fixed.
Absolutely.
Or maybe if the owner is irreplaceable at this moment, what are the steps that we're taking in to make that business owner replaceable? And by that I mean maybe they are the top sales guy in the organization.
Right.
Well, it's time to start getting some sales talent in there so that you can be more of a general manager.
Right.
Of a business versus, hey, I'm relying, I do the sales, I do the marketing,
That's
I take
right.
out the trash, I do it all.
That's right. If I go fishing, then there's nothing's going to happen while I'm gone.
Yeah, exactly.
Exactly. Great. So Neri can really bring a whole team together to that business owner to really maximize that company over, I don't know what that period of time looks like, but over a period of time to get ready for that sell and be able to exit on top.
That's exactly right. And so, we have a lot of competence internally in terms of being able to fulfill a consulting type role, and we just choose to focus on valuation, value building, and value transfer of organizations. But where we don't have sort of in-house full-time expertise, we bring on partners like yourself, CFOs and accountants and so on and so forth as needed.
Excellent. That's great. So that's all the questions we've got for this episode of Cyber Sentinel. I want to thank Eric for being our guest from Neri Capital. Eric, how can people find you online?
They can find overall information on my company at nericap.com, and specifically for business valuations, whatismybizworth.com is the place to go, and you can start your online valuation for free.
Awesome. And you can find us at ascgrp.com or #CyberSentinel.